So we are going to practice a couple of objective testing questions. So first one is on going concern. We are going to practice the question relevant for Mulberry Co. When it comes to objective testing questions, there's no point in reading the requirements. First of all, read the case. When it comes to construction questions, so they set up questions, always a good idea to look at the requirements before start reading the case. So here, let's read the case first. It is 1st of July 2025. You are the audit manager of Kiwi & Co. and you have been provided with the following information about your client, Mulberry Co., who is a kitchen manufacturer. The company's year end is on 31st May 2025. So immediately, Lukshajini, your mind should be visualizing this case. So today is July. Year end was May. So May year end, June gone, July, right? And the company is a kitchen manufacturer. So I don't know what is a kitchen manufacturer. They may be, what do you call, developing kitchens for maybe hotels, or maybe developing equipments for kitchens. So we don't know that. I also don't know what is a kitchen manufacturer, but let's see. The kitchen manufacturing industry has many competitors. The industry is cyclical with a high percentage of sales occurring on the fourth quarter each year. So look, Shajini, your brain should be now visualizing. All right, fourth quarter sales are going up. Mulberry Co. has recently been experiencing trading difficulties as it is a major customer who owes $600,000 to Mulberry Co. has ceased trading, and it is unlikely any of this will be received. So, look, Shajini, what should be sparking in your mind right now? What is going in your mind right now?
Money shortage.
Sorry?
Money shortage. And the money is going down. So it's going concern.
Wrong. There's no indication revenue is going down, right? There's an indication the data has gone bankrupt. One of the data has gone bankrupt. I have lost. So $600,000 I received from that data. There's a chance that I may not receive that money from the data. So it's not the money, but it's my cash flow problem. I have a cash flow issue. I have a working capital problem right now. So, and immediately you should be thinking, is it material? So does the company's financial information is given? No. But if they say $600,000, generally it's a material amount. So that's a lot of money actually. The sales director has recently left Mulberry Co. and has yet to be replaced. So there's no sales director also. Okay, so if the sales director is not there, what will happen, Lukshajini? The company may not be following up on the sales properly, following up on the collections properly. So there's a chance of sales going down also. And if you take any company, generally the sales directors, production directors are the most important people. If they are not there, we can't run the company. So there's a serious going concern issue here. These are things to be running when you read this question. The monthly cash flow has shown a net cash outflow for the last 2 months in the financial year and forecast as negative for the forthcoming financial year. As a result of this, the company has been slow in paying its suppliers and some are threatening legal action to recover the sums owing. So obviously we don't have cash. We have a net cash outflow position, and we have for the last 2 financial years. So, and the forecast is also negative for the next financial year, right? So the company is slow in paying its suppliers. So delay, and some suppliers are going to courts also. Due to the financial difficulties, Mulberry Co. missed a loan repayment. Oh my God. Because of this breach, the loan covenants, the bank has asked that loan $4.8 million to be repaid in full within 6 months. So what has happened? You did not pay a loan and the bank has asked to repay immediately. As a result, within 6 months, you are supposed to pay that loan. So the long-term loan has become a short-term loan. The directors have decided that in order to conserve the cash, Mulberry Co. Will discontinue research and development for the remainder of 2025. So we are not going to do any research and development further. Okay. So question number 1. So first question, Lakshajini, you answer, then we can go to Shami, and then Hajara, then Imran. Which of the following statements summarizes Kiwi and Co's responsibilities in relation to going concern? Right? So, Lakshajini, who is Kiwi?
That
Lakshajini.
company, that company.
No, that's the audit firm. Kiwi is the audit firm. Mulberry is the company. You have to be sharp. You have to be focused on the question. Do you understand? Lakshajini, are you there?
Yes, sir.
So, who is Kiwi?
The auditor.
The auditor, right? You just got up from sleeping. If possible, have a good cup of coffee and come. So we have to be sharp. We have to be focused on our exam this time, right? All right. So Mulberry Co. is our company. Kiwi is the auditor. Which of the following statements summarizes Kiwi and Co.'s responsibilities in relation to going concern? Number one, evaluate management. So what is the auditor's responsibility? When you come to going concern, what is the auditor's responsibility? Lakshadini, tell me, auditor is supposed to ensure going concern of the company. Am I right or wrong?
Right.
No, I'm wrong. As an auditor, I am not. How can I ensure going concern of your company? So you are running Lakshadini and Co. I'm your auditor. I see you are going to be bankrupt or whatever. Can I ensure you're going concern? Possible?
No, managers, it
Yeah, I'm asking what is the auditor's responsibility? I'm not asking what is your responsibility or your management team's responsibility. As an auditor, what is your responsibility? Right? As an auditor, my responsibility is not to ensure going, do you think as auditor I should ensure going concern?
no.
No, that is not my responsibility. So tell me, as auditor, what is my responsibility? What I should do in terms of going concern? I am supposed to report. If I see a going concern problem in the organization, I have to make sure the accountant is reporting. If the accountant is not reporting, then as an auditor, I should report in my audit report. If the accountant is reporting, I will modify my audit opinion by putting an extra paragraph, audit report by putting an extra paragraph, material uncertainty in terms of going concern, I will report. If the accountant is not reporting, I will give an adverse audit opinion. I would say, look, financial statements are not giving true and fair. Because there's a going concern problem, you are not reporting. Now look at the options, look, Shajin. Number one, evaluate management's assessment of Mulberry Co's ability to continue as going concern. Evaluate and see whether Mulberry Co is, what are the auditor's responsibilities. So what are the, evaluate and see whether Mulberry Co can really run for the foreseeable future. Management has to do the assessment. Mulberry Co's management has to do the assessment. So evaluate their management's assessment to see whether the company has a going concern or not. Number two, determine whether Mulberry Co can prepare its financial statements using going concern basis of accounting. So can they really use going concern basis? Remain alert throughout the audit for events or conditions which may cast significant doubt on Mulberry Co's ability to continue as a going concern. So throughout the audit, remain alert. See, is there a possibility of the company going bankrupt? Obtain evidence to determine whether a material uncertainty exists if events are identified which may cast doubt on Mulberry Co's ability to continue as a going concern. So obtain evidence to determine whether a material uncertainty exists if events are identified which may cast doubt. Okay, if there's a doubt on going concern, so make sure that you are collecting appropriate audit evidence regarding material uncertainty. So what is the answer, Lukshalini? Which out of this now four, what is the auditor's responsibility? Which ones are?
See, 1, 3, and 4.
1, 3, and 4. Number 2 is not auditor's responsibility. That's what you are saying. I'm looking at your answer, number C.
That one is management's responsibility.
Determine whether Mulberry Co. can prepare its financial statements using the going concern basis of accounting. Okay. So whether they can prepare the accounts using going concern or not. Okay. So that's what you are saying. Let's see. So that's the first one. Now let's go to Sham. Okay. So also it's coming immediately, no? Good. So right. Exactly. So you are right. Number 2 is the management responsibility. Balance 3 are auditor's responsibility. To do this. It's a balance question. Number 2. Continue. Okay. Next, let's go to Shami. Which of the following are indication that Mulberry Co. may not be a going concern? A kitchen manufacturing industry has many competitors and seasonal trading. A major customer has ceased trading over Mulberry's $600,000 that is unlikely to be collected. Mulberry Co. is experiencing negative monthly cash flows, and this is expected to continue. Mulberry Co. has missed a loan repayment in breach of loan covenant and has only 6 months in which to raise $8.4 million. Of that is now repayable. Shami, which one is the answer? Which one is a going concern indicator for you? Shami, are you there?
Yeah.
So which one is your answer?
The manufacturing industry has frequencies and that's not really because that's the normal now. That's an audit concern. So, 2 definitely will become. No, not answer. Yeah, point number 2.
2.
No. Point number 2 and like yeah, 3 also come. Loan repayment as a financial indicator of the fourth point. Number 4 is financial indicator. So answer will be 2, 3, 4. Yeah.
2, 3, 4. Okay. The problem is you are too late. At this stage of your studies, Shami, you have to be very sharp. You have to be sharper than me. Once I conclude the reading, you should be able to give the answer quick, super quick. Because remember, you have only 2 minutes to give the answer. Right?
Okay,
so next one, please do it faster. Okay, let's go to Mr. Imran. Which of the two, guys, any doubts you can ask? If you have any problems, you can ask. That was obvious, right? The previous question was if the first one, which spoke about the kitchen industry has seasonal sales and all, that's not an indicator of a going concern problem. That's an industry. That's not an indicator. Which 2 of the following audit procedures should be performed to assess whether Mulberry Co. can continue as a going concern? Imran, perform a sensitivity analysis on the cash flows to understand the margin of safety of its net cash in outflows. So perform a sensitivity analysis on cash flows to understand the margin of safety of its net cash in and outflows. Okay. There's one problem in that, but I don't know whether to that extent they are examining or not. Now what they are saying is do a sensitivity analysis. That means what is a sensitivity analysis, Imran? So I prepare a budget, okay, for the next financial year, say 2025, just born now. So 2025, I prepare a budget, and what I do is I say, look, this is this much is going to be my profit. But there are a lot of things which can affect me, right? There can be a strike, there can be a fluctuation of exchange rates, there can be a supply shortage. So if these things happen, by how much my what do you call revenue or profit might get affected, or my cash flow will get affected. So if something materializes, by how much it might get affected. So if a strike comes, my cash flow might get affected by 10%. If an earthquake happens, how much my cash flow might get affected. So analyzing like that is what you call sensitivity analysis. So on the cash flow forecast, we should do sensitivity analysis. But the confusing point for me is here the examiner is not talking about a cash flow forecast, but he's talking about the cash flows. Perform a sensitivity analysis on the cash flows to understand the margin of safety and net cash in and outflow. So I assume he's talking about the cash flow forecast, but if he's talking about the past cash flow, you don't have to do a sensitivity analysis, right? I assume it's a forecast. Number two, confirm the existence of accounts payable by sending confirmation letters to a sample of suppliers. Okay. Which of the two audit procedures should be performed to assess whether Mulberry Co. can continue as a going concern? Right? Inquire of Mulberry Co.'s legal advisors if any legal claims have been brought and request their assessment of the likely amounts payable to the suppliers. Last one, interview the random sample of employees to evaluate the likelihood of misappropriation of assets and other acts of frauds. So, what is your answer, Imran? Imran, are you there?
A and C.
A and C. Which two of the following audit procedures? Okay. A and C. Which two of the audit procedures should be performed to assess whether Mulberry Co. can continue as a going concern? All right. C. Rukshajini also gave the same answer. Good. Let's next go to Hajara. It is 1st of July. Sorry. Which of the following is Kiwi & Co.'s most likely to consider a mitigating factor when assessing Mulberry Co.'s ability to continue as a going concern? Mitigating factor, right? A factor which will make sure that they are not having problems. They will survive as a company. Plans to discuss with lenders the terms of all debts and loan agreements, like Sri Lanka did with all the lenders, with all the donors. The lenders, we went and had discussions and corrected our loans repayment days, delayed. Postponement of research and development expenditure. Plans to hire a new sales director. A strong relationship with its suppliers. Hajara?
Answer A will come. Postponement of research and development. Answer B.
Which of the following is Kiwi & most likely to consider a mitigating factor when assessing Mulberry Co.'s ability to continue as a going concern? So why not A? Why are you choosing B?
So if you can discuss with your lenders. So if you can discuss with your lenders and like extend your credit period, it will like improve the cash flow period.
Now, what's the reason? The reason is this:
Yes.
A is a much better approach actually, but the problem is you are having a plan is not enough. You should have discussed, and by now you have to have a loan restructuring agreement. Then it would have been a much better answer. Now, postponement of research and development expenditure, why it's a suitable answer is that's under your control. If you postpone, that's fine, right? Then we are not going to spend certain amount of money. Therefore, it's a good one. A would have been much better one if the restructuring plan had been in place, right? Okay. Last one, again, we go back to Lukshajini. Which of the following are, Kibi and Co determines that a material uncertainty exists that may cast doubt on Mulberry's ability to continue as a going concern. Which of the following correctly summarizes the audit opinions which can be issued on depending on whether or not the uncertainty is appropriately disclosed? So if appropriately disclosed, unmodified or unmodified with a separate going concern section, qualified except for, unmodified with a separate going concern section.
Unmodified with separate going concern section.
Wait, that's not the, yeah, that's fine, good, right? But other part also there, not appropriately disclosed. So will be unmodified with the separate going concern section, unmodified with a separate going concern section, adverse opinion, or qualified except for adverse. So which one is the answer? A, B, C, or D?
D.
B for black or D for dark?
D. Dark.
Right. So obviously, right? I mean, if you, yeah, D for dark is the fact. Because obviously, if you look at this, Shami also gave the same answer. So this one, if I review, yeah, if there's a going concern problem and the client is disclosing, what's the additional paragraph we add, Lukshajini? What's the name of the paragraph?
Basis of opinion.
No. If there's a company has a going concern problem.
No. Material uncertainty going concern.
Exactly. So there is a audit reports format.
Sir.
1 minute. Yes, Imran, tell me. Or somebody was trying to ask a question, right?
Sir. Sir, I saw one question in the Kaplan exam kit related to this. The audit, the client said to auditor, he has to disclose the audit report to investor. He asked the
He has slowly. He has to report the audit report to
invest, not for the shareholder, prospect investor.
okay.
Therefore, then there's the auditor responsibility is to report to the shareholder, right? Therefore, so that matter where's included? Where included in the file statement? Is that come under embeds of metagraph or where it is?
So what you are saying, what I understand is you are saying the company has a going concern problem and it has to be reported.
No.
Sorry, then?
The audit, the client say to auditor, prepare the audit
Slowly,
report.
you have to talk a bit slowly, Imran.
Okay. Client ask the audit report from the auditor to report to the investor.
Audit report to report to the investor.
Yeah, not for the shareholder.
That's wrong. No, we don't report like that.
Oh, then yeah, that's wrong. That's why I asked sir, where it could included in the audit report, sir. Which paragraph we include? We are only responsibility to report to the shareholder, not for the investor.
Yeah, we don't. I mean, that is part of the what is audit like chapter 1. You prepare the audit report and you report to the shareholders. You don't
Yes.
report to potential investors, but everybody can access your audit report. But
Yeah. The question is
Well,
about this.
some cases can be arises not like that because investors need to audit. Sometimes they request to do audit before doing the investment through the company.
before, are you talking about the due diligence?
No, I like to take an example of Imran says now. So for so far, if their investors like request like that, for some time maybe a investor before he was willing to do investment in the company, but he need to clarify that. Is the company actually functioning well like that? So far, investor request to do auditing on behalf of him can be
Okay.
held like that.
Yeah, that's what you call a due diligence assignment. That's not audit. That's nothing to do with audit. Now, audit is a statutory requirement where we are supposed to conduct the audit every year and give the audit report to the shareholders. That's it. We don't give to private investors or banks or whoever. But our audit report can be given to anyone by the client because that's a public document. Audit reports are. On the other side, if I'm an investor and if I want to buy a company, right, then what I will do is I will hire an audit firm to go and conduct a due diligence assignment for me. So that auditor who will come inside, right, he will perform certain tests like different type of testing such as business valuations to potential customer, who are the potential customers, how much the customers may stick with us, how much of the employees might stay with the company after the purchase. Things like that will be assessed and he will give you a report thereafter, right? So that's what you call a due diligence assignment. Now that is not part of your syllabus. So if anybody asks, look, we have to give the audit report to potential investors, I don't think we don't have to give the audit report to potential investors. Imran, by any chance, if you have the question with you, can you share the screen or a photo of that question with me?
Okay, sir. I will send you.
All right. Okay. So when it comes to the audit evidence planning, yeah, conclusions and reporting. So here we go. So we had a report statement of management response. Under management responsibility, we had to mention management is the one who is responsible for evaluating going concern of the company. And the auditor's responsibility, we had to clearly mention it's the appropriateness of management use of going concern basis. They are used the going concern basis, whether it's right or wrong. Number two, whether material uncertainty exists that may cause significant doubt on entity's ability to continue as a going concern that we may have to report. So generally, if there's a no problem, then no issue, right? If there's a if there's a material, if there's a going concern problem, and if it has been appropriately disclosed, in that situation, we go and give this opinion. Where it is here. Statement. Yeah. So here, if there's adequate disclosure, audit report expresses an unmodified audit opinion, include a section which says material uncertainty related to going concern. So in that, he will refer the note in the financial statement which describe the material uncertainty, and he will include a statement of the material uncertainty exists, and the audit opinion also he will give based on that. If the adequate disclosure is not enough, then he may go for, if it is a serious problem, he may go for a or adverse opinion. If it is not so material, right, not pervasive, then he may go for a qualified opinion. It is mentioned here. So these are things you have to read. Going concern basis is inappropriate. If the financial statements are prepared on a going concern basis, when the basis is inappropriate, the auditor must express an adverse opinion and describe the circumstance in the basis for adverse opinion. This is irrespective of any disclosure made, right? So if the company is not in going concern, then of course you have to give a bad opinion, like adverse opinion. If management is not willing to make a assessment of going concern, right, then you may have to go for a qualified or disclaimer of opinion, lack of audit evidence. So this is the most important part you may have to understand.